Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And for news in EVE Online, we did get a couple of things, not exactly development stuff right from the mouth of CCP. But first of all, we have the Imperium that is apparently going to war. They're deploying their full might, I've seen in a video, to a region, and I guess we're sort of seeing a proxy war that could be starting there. It is going to be interesting to see how that develops, and yeah, there's some parallels to what's happening in real life to be spotted there as well. It's going to be interesting, and it might actually have an impact on the market. In fact, it may also explain what happened to Megasite last week, and you may just see that coming up on the ticker as well, what's happening for Megasite this week. The other item that I find kind of interesting is that we got a tweet. I noticed a post on the subreddit about that, a tweet that mentioned specific targets for the Gallente Federation faction warfare players to assault a certain system and then the surrounding systems as well. And so my theory here is that this feels rather unusual, and that this might be one of those first little hints as to the direction of the story that CCP is telling, and that it's all heading for the faction warfare update. So that's probably the thing that's gonna happen there, which for me does mean that I might look into being a little bit more active in Gallente space soon rather than just a Mars space. But yeah, we know that CCP was basically going to have a story that was first going on in the background, and they would, you know, give slight tidbits of information as well, maybe through tweets, through posts on Facebook, through videos, scope videos and things like that. And well, this to me feels like the first one in order to evolve towards the full deployment of a new feature. And so my idea here is that it's going to be towards the faction warfare stuff. So pretty cool. We will of course keep an eye on all of that. Before we jump in on the market, we'll take a quick look at the New Eden store. I received a mail that there's a sale happening for Omega time, but probably not from the store itself. It could have an impact on Plex. We've got the Luminaire Rising skins. Well, if you're into the orange gold scheme, then this does look pretty good. And then Federal Police skins, again, really nice looking skins there. A couple of bundles that are to be spotted. Still the Elite XIX Omega bundle if you want, but no special sales in the New Eden store at the moment. That means that we move to the market. Let's get rid of that. Get on not the fitting tab, but the market tab. And then we of course start with pilot services coming in at 3 minutes. There we go. As always, we start with Plex. Here is the Plex chart. So after reaching the 1-year high point a little bit earlier this month and touching 4 million on the max price on a day, we did pull back a little bit, but you can see the 20-day moving average trend is still heading up and is now heading towards the 3.75 million on average. In GDA for 4 itself, we're talking above 3.2 million, heading for 3.9 million pretty quickly for the sellers of Plex, and buyers are heading towards 3.7 million. A little bit of competition to be expected in the Tranquility Trading Tower. Actually not that much, just one seller coming in just below 3.9 as well. And for the buyers, a little bit more action here, but still in GDA we've got the cheapest seller and the most expensive buyer coming in. So it's really all about GDA at the moment for the Plex. Trading volumes are down substantially on these higher prices. That's quite notable compared to the rest of the year. We are talking very high prices at the moment, of course. Then we have the multiple pilot train certificate that bumped up from that 1.5 billion mark a little bit. We're talking above 1.5 billion for the sellers and just above 1.4 billion for the buyers. So there's still that margin there, but you can see that it's not very easy considering where the daily averages are to grab a buy order for the multiple pilot train certificate. Again, volumes going down as well. A dozen a day, 20 a day is what this market is managing at the moment. So I think that the upwards pressure from Plex is going to correlate much more strongly now with the multiple pilot train certificate as well. And so expect the, whatever Plex plex is doing the trade certificate to follow suit. Because of the low volumes, I think it has next to no choice, and it basically means that it absorbed the sales that have driven those prices down, and it did take a very long time. So a big sale on multiple pilot trade certificates creates volumes all of a sudden. Let's see here, over 100 units, and here as well over 100 units. It really takes several months for the market to fully absorb an impact like that. Then we have the skill extractors coming in next that are plateauing at that high price range as well. Touched 450 million ISK here on the max price for a single day. Retreated a little bit from there as well, but you can see that 20-day moving average trend is still up quite substantially, so we will see if it can break out. All of that, again, in my opinion, is going to depend on what Plex will do. In GDA, 438 million, 437.5 in the player-owned trade hubs. Buyers coming in at 425. That's very aggressive compared to 400 million in GDA 4.4, so that is another sign that upwards pressure for these average prices might be what happens next. Impact on the injectors here are the large scale injectors, also basically plateauing at that 1-year high point, well above 750 million on average. 783 million for the sellers, 737, 738 for the buyers. So there is a little bit of margin here between sellers and buyers, but again, same story. While you can occasionally get a buy order to trigger, most activity is on the sell orders, and you can also see that they are being forced up, those buy orders, towards that 750 million mark as well. I don't think small scale injectors can bug the trend. Nope, they are also plateauing here at that high point just below 160. On the chart are the sellers above that. They just climbed above 160 million as well. Buyers still at 143. Again, it is a little bit of margin opening up, but if you're hoping to be able to still grab a cheap small injector at the moment, again, your hopes are dashed. All daily averages are at the high end of the chart, and it's very, very difficult. It is possible, but I think you have to be a little bit aggressive to trigger a buy order on the injector markets at the moment. One noticeable, let's take a quick look here. While the large scale injector volume seems to be under pressure from just a couple months ago, the small scale injector volumes are actually holding on quite nicely. Then we have the daily alpha injectors that are very quickly going back up as well, back above 45 million, at least for the last couple of days on the daily averages. We're stalling a little bit maybe at the tail end, but I think the upwards pressure is just across the board. And if you look at sellers, they're already back at 48 million ISK, and then 43 million for the buyers. Basically here, I do think that we've got just general upwards pressure in the pilot services, of course, because of the higher prices in general. That was next to inevitable, but it is going to be interesting to see if, let's say, by the early next month, we hit 50 million again. Will this trigger another CCP sale, another CCP intervention? Is CCP on top of the daily alpha injector specifically for new and alpha players, or will it let it slide? And for instance, can we get a breakout to a pronounced 1-year high point on the market here? That's going to be, for me personally, very interesting because it will give us a little bit of insight in what CCP actually does when it comes to market manipulation as well, which, well, some you might be against that, you might be for it. It is still, of course, CCP's game, and they actually, you know, for those that might not be in the loop as much, they very specifically mentioned this on one of the FanFests several years ago, that they were going to have this approach where you know, they will actively intervene into the market when they deem that necessary. So far though, what to me has been interesting, and I'm still not sure if that's also the case, what CCP has always done is basically banned and like basically destroyed plex and things like that, basically form and taxes from players to NPCs. For CCP, they're seeing that, at least if from time to time describe that as a budget for market intervention. So they have many plex that are from banned accounts, for instance, and you know, they could dump that on the market if they feel like they have to lower prices and things like that. So it's very interesting from this market dynamic / sandbox perspective that CCP does intervene, but we will see, of course, what happens with alpha injectors before we make too many predictions on all of that. And then we've got the hypercores that are basically translating the general trend in the pilot services sector. You could say lower volumes, higher prices, because real life prices have gone up. And on top of that, we have the summer slump that might not do this any good either. So we're talking 417,000 for the sellers, 393,000 for the buyers, with again daily volumes at the high end of the min-max chart. So it's really the sellers that are dictating the price. Those that still pony up the money to bring it to the market can basically ask the ISK that they want, but trade volumes are pretty low. Next up, we've got the minerals coming in at 1040. There we go, and as always we start with titanium. That is trying to form a bottom, I would say. Went pretty close to 3.5 ISK, but has started to pull up a little bit from that. We're talking 319 outside of JIDA, but let's take a look at JIDA itself. 375 for the sellers, and buyers coming in at 359, so we never really got close to that 3.5 ISK. Bumping up a little bit from that. There's still big sell orders here, 1.5 billion, lots of sell orders above 100 million units, so plenty of mining, plenty of supply is still happening in ISK for titanium. But personally, I do think that the war that has been announced, right, if it can stick, if it can last long enough, it might actually drive some players from ISK activity through alts and things like that back into their Imperium mains, and in order to field fleets, fight in PvP and things like that. It really could cut down on the PvE activities that just generate resources, and I think we're seeing that here in the minerals. And then for me, I'm already going to give that prediction or my view on this as well. This could really be the turnaround for the advanced moon materials as well. Last week we saw, well, we were super low, lots of one-year low points yet again in those advanced moon materials because of the increased availability for moon mining. But of course, a proxy war in nullsec could really be the turnaround there. So maybe looking at the investment opportunities there. I mean, it's just a second tidbit. First was the massive jump in megasite in all of this. That to me was an indication that maybe lower activity for the summer was cutting into that maximum potential for mining output. If on top of that you're getting a full deployment from the Imperium and then a counter from other groups, plus of course the third parties that just are, I think, really wanting to go after anyone at this point as well, you could really see a massive decline in activity that's going to not just cut into the minerals that might be going up in price and like here might be having a little bit of a turnaround or a bottom movement, but you could see the same thing pull through into moon mining as well. It's going to be very interesting, I think, to see if the war gets hot and then what the impact is going to be on the resources. But I think for resource gathering, it could really be like a low point here price wise, as supplies could dwindle because of all of that. Then we've got pyrite, same story, although here the real bottom formed in April apparently, but we get a little step up here as well in the price of pyrite, up to 923 for the sellers and 869 for the buyers. And let's see if Mexalon is doing the same thing. Nope, it's basically, well, actually here at the tail end you can see we went below 60 and sellers are back at 65 almost, and buyers at 58, maybe a little bit later to the party, but the upswing for ISK minerals seems to already be the case. This could really also, if that theory that I'm, it's just a theory that I'm explaining here comes true, this could also be the final push for Isogen, because then the final reserves might just come out, and we might find that price range then over the summer for where Isogen will trade on active demand supply. That's my thinking here. Very bad chart. It's really, I think, a little bit of a bug on that min-max, but we are staying just below that 400 ISK price range at the moment. Still 20-day moving average, still slowly edging up here, and so we're gonna bounce into that. I think 400 again, very nice number for people that, for instance, bought Isogen at 50, 60 ISK below 100. So there will still be some chunks of supply that will come online because of that. But if then active supply drops down as well due to activity, things might change pretty quickly in the dynamic here again. And you can see 400 for the sellers, 377 for the buyers, and 43 million here. Well, it's not 400 million or 2 billion units that's coming in. All of these for me, 4.6, 0.7, 4013, all of these are also suspect in the sense that these are probably also disguised sales, not from active supply demand, but rather reserves that are coming online. And you know, this is a nice way to ride the wave up towards maybe a 420, 450, maybe even a 500 or 600 disk here with 10 million units. But you can see that the reserves above 400 disk are coming online, but the very big difference in tactic is that it's no longer a single dump of several hundred million units. Now they're getting a little bit smarter on this. They're gonna ride those upwards waves in smaller volumes to not completely crash the market after we reach a certain price point. So here we got a serious pullback, here we got a serious pullback that lasted a long time. This could really be done with just 50 million units or something like that. This is, in my opinion, a way smarter way to do it, because you'll be able to slowly ride that wave up, and then you'll bounce into the 13 million, whatever it is, but you'll know that new price point exactly, and you won't get that massive pullback, as new supplies will be much harder to materialize in the Isogen market. So very interesting here as well, but these are actually all in all pretty substantial numbers if we're looking at these, and I'm seeing these as reserves that are coming online. But the big difference is it's not 400, here is 200 million units. No, it's 400 to 500, and we're just basically going through that entire strata with 10 million here, 10 million here, 10 million here, etc. So it's basically ready to ride another upwards surge in the price of Isogen, and again the war could be a trigger for that. Then we've got the Noxium market that was trending below average and is still trending well below average, actually heading towards 1,000 disk on a low point. Not what I personally expected, but 1,000 for the sellers, 986 for the buyers. Noxium losing the crown during this January-April period, close to 1,500 disk. This was the most expensive Tech 1 mineral in the game, coming from low-sec, but perhaps supplies are coming online and players are, well, with the decline and the low price for high-sec minerals, are finding their ways, their methods of venturing out into low-sec and getting some of that Noxium to the market, bringing the price down to 1,000 disk. But completely different situation, at least we've already seen that in Megasite. Same story in Zydrine though. Look at that, 1,500 disk over the last week has been reached, and in fact it's 1,590 for the sellers, 1472 for the buyers. Very, very pronounced 1-year high point. And then we get Megasite, same story, 1-year high point, 1,500 disk on the chart, 1,590 for the sellers and 1,456 for the buyers. Now, from my perspective, the Imperium is known to really play the game across the entire spectrum. So, I mean, they're going probably into a hot war or a full deployment, but they also play and manipulate the market. They look at economical advantages and economic damage to their enemies. All of that stuff is part of their style, and this could just be this as well. They know they're gonna deploy. They know that supplies are going down. They're already, getting all that cheap Megasite on their own books, and if those supplies do dwindle enough, then right, everyone else is stuck with those very high Megasite and Zydrine prices. And you can do that with Megasite and Zydrine. You can't do that with Tritanium, but the wave has started, I think, and so this could be quite significant for the general turnaround. I wonder what's going to happen here with Morphite as well, and yeah, that's still pretty flat. I thought, well, maybe right at the tail end, if we go detailed enough, you can see that those max prices have gone up here. So here we're touching the max prices at 42,000, and now sellers are at 43,000, getting up to 44 pretty quickly, even seeing 44.5 pretty much at the end of the sellers, and then 41,600 for the buyers. Maybe that first little prick of upwards pressure on Morphite as well, again due to that story that we've got summertime, which is already low activity, and then a full deployment of the Imperium that could really be a problem for supplies. Again, a little bit of You could make a little bit of a parallel to what's happening in real life, where, well, an actual war is also causing problems for supplies of food, energy, all of that stuff, and is exacerbating prices. So we will see if that comes true or not, of course, here in EVE Online. But for now, this week, minerals, lots of pressure, especially in the Nozick minerals, which is where I think everything will be triggered. Next up, we've got PI coming in at 2005. 2005 for PI. Then here I'm actually expecting the exact opposite, because PI is very passive, is very easy to keep the supplies going, but if more players are not necessarily focused on those activities, we could actually see lower prices in PI. The opposite could be if losses need to be replaced quickly, right? Carriers, dreadnoughts and things like that. If we see hot wars in capital ships, which I personally don't think is going to be the case that much, then we could actually see higher prices, as eventually, of course, a bottleneck will be reached on this. But for me, my feeling is if it's going to be a proxy war, it's going to be mostly sub-capital stuff, then I do think we'll see pressure on PI. So let's see here for the broadcast nodes. Holding on pretty well at that just below average price, but you can also see that the minimum price has dropped off substantially in the last couple of days, and from time to time there's days where the averages are actually in favor of the buyers. 1.44 million to 1.2 million for broadcast nodes. Construction blocks is back at 8,000 disk, which is not the best price in the last 6 months, but it's still very reasonable over the full 1 year chart. 8,000 for the sellers, 7,900 for the buyers. That's a super narrow margin right there, showing that there is still pretty strong demand here. Then we've got coolants that had to give back a little bit of ground, but is still doing, in my opinion, quite well, above 8,750. 9,400 for the sellers, 8,500 for the buyers. Bit more margin here, and again, you do get quite a bit of selling to those buyers as well, just to get the immediate sale going. But prices, again, from my perspective, for coolants, still very respectable. Then we get enriched uranium staying at 10,000 disk. There's not that much to say here either. First couple of sellers with decent volumes just below 10k, but buyers at 9.6 should be easy to keep things in check. Integrity response drones still very expensive, of course, 2.5 million to 2.3 million because of the Siege Green update. So apparently this is now a real bottleneck for larger ship production. Then we get mechanical parts. All right, not what I expected, but there we go. 1 year high point for mechanical parts, 11,000 disk for the sellers. Almost 11,000 disk for the buyers as well. That is one thing that may be a little bit different in all of this. We also see, I can see that on the ticker if you keep an eye on it, that fuel blocks have done a very big jump all of a sudden as well. So the need for fuel because of the deployment is actually absolutely massive, and this could trickle down to some higher PI prices as well, as maybe a little bit of extra production is needed for fuel blocks and things like that as well throughout a war deployment. And so mechanical parts, very nice to be selling. I started selling last week. I may just accelerate my selling this week for mechanical parts as well before I jump on a Galente adventure. Miniature electronics, same story, breakout, pretty close to a 1 year high point as well. 12,000 for the sellers, 11 for the buyers. Could I be wrong on this? Well, maybe. I mean, this is like this. All of them are holding on very well, and this is the second one that all of a sudden breaks out. Is it possible that there's massive production of PI that happens in nullsec, and that during a deployment people are expecting supplies to dry up from there? That's a possibility as well, although I personally think that wormhole space, for instance, also has awesome PI potential, and that we should see plenty of supply. But for now, my first feeling here, looking at PI with nanofactories getting above 1 million as well, haven't seen that in a while. We're seeing upwards pressure in PI. Look at organic mortar applicators getting above 800,000 disk, 830 to 660. So buyers are still waiting and seeing, but maybe some panic buying is happening here as well. It's a big surprise, but yeah, most of these are actually going up. Recursive computing modules below 1 million. first one with a little bit of pressure here, 800k to 800k. Then we've got the robotics, that's also doing a jump above 70,000 discs, 75 to 72. Rocket fuels back at the high end as well, 11,000 and up for the sellers, not bad. Self-harmonizing power cores, able to maintain and actually starting an uptrend after that big boost from the Siege Green update as well, staying above 2 million very easily. Sellers are already back at 2.15 million, 2.3 getting into view very quickly as well. Smart fab units, also high prices above 60k, 64,000. Sterile conduits next. The first one, finally, that's a little bit more in line with what I was expecting, 840 to 630 for the buyers. So here we do have demand dropping off and steady supplies that are bringing prices down. Then we get supercomputers, well, basically stopping at 62.5 and bouncing from there, not much to say. Synthetic oil, 1 year high point again, 10,000 for the sellers, 8.2 for the buyers. Well, the market can definitely surprise you. Here are synthetic synapses, maybe again the war, more podding, more need for implant sets, and there we go, back at 100,000. This is actually tradable bump here in a matter of 15 days or so. Buy below 80, sell at 110,000, and you are looking at a nice trade. So we definitely have to keep an eye on those PI materials tied to implants, because this is now a third bump, not necessarily due to CCP announcing, hey, there's a new implant set coming. So we've got many scenarios where basically you can make a trade happen in these. Transcranial microcontrollers also heading up now, 83,000 almost for the sellers. Water-cooled CPUs, these are just so oversupplied that they're not really able to break out, stuck at 5k. And then finally the wetware mainframes also trending up on the daily averages here, and those minimum prices, you can see those are trending back up above 1.5 million for the buyers. So a little bit of surprise. I thought if there's one category that on lower activity and a deployment would go down in price, it would be PI, but I seem to be wrong on that, because we got several 1 year high points and mostly upwards pressure on these prices. Next, advanced move materials. That could be interesting if you see a turnaround here as well. 27 minutes for this one. There we go. Let's see what we've got. Crystalline carbonite for Galente, and we're back above 100 disc. 106 for the sellers, and buyers up above 100 as well. Then for Caldari, it's titanium carbide, also trying to form potentially a bottom. I mean, it's still risky, but this to me is another sign that, yeah, maybe something in OSEC is happening that could mean a turnaround. You can see supplies here not that plentiful anymore, 131 to 130. Buyers forced up massively. And then we've got Minmatar, which is Fernite carbide. That one is still flat, so I would say if there's a buy opportunity, Fernite selling for below 100 disc, buyers at 97, you're buying Fernite at 100. If this is the start, that would be where I'd put a little bit of ISK. And then for Amar, same story, still stuck at 100 as well, 104 against 101. Honestly, I personally feel that if we get that massive turnaround in Caldari and Galente stuff, Amar and Minmatar will follow suit eventually. What about those meta materials? Galente first, please. Photonic meta materials still stuck. Alright, that's interesting. 7.8 for the sellers, up a little bit, and just below 7.5 for the buyers. Then for Caldari, it's non-linear. Still definitely well below average for the year. Slight bump, but nothing too spectacular. 13,000 to 12,650. Then for Minmatar, it's plasmonic metamaterials, still stuck at the 1 year low point as well, 10,000 to below 10,000 for the buyers. And then for Amar, it's terahertz metamaterials, that's also not that far away from the bottom range, 10.8 to 10.630. Some buyers coming in on that one though. So to me, this is very interesting. It's still a bit of a gamble, of course, because you never know how something like a deployment goes in EVE Online or what's next in the pipeline. But Last week I was really hesitating. This week I'm more and more convinced that we could have just formed and that we're reaching a bottom in a lot of these moon materials, and that starting an investment at the moment could be the right move for that medium term, looking probably, well, at maybe the end of the deployment from the Imperium and whatever happens there, or maybe even after the summer on increased activity, increased demand for ships. It could be the right time to move in, but again, I'm not Nostradamus, I don't know. This is just my theory on what could be happening. Fermionic condensates still stuck at the low end. Let's see if there's any big differences to spot here as well. Ferrogel still stuck at 20k. Then we do have fullerenes that are going up a little bit all of a sudden, 570 to 512. So this is another telltale sign that maybe something is changing in the dynamic here. Hypersynaptic fibers also doing a little bit of a recovery, but I don't think it's gonna last. Well, maybe it will. We'll have to see, of course. Nanotransistors up a little bit from the bottom. Phenolic composites up a little bit from the bottom. Pressurized oxidizers still going down. Right, so is reinforced carbon fiber. So these are like newer materials, are below 7500. Could be another one to look into. Ceramic fibers also a little bit away from the bottom. So in general, this week, well, we don't have 1 year low points in these advanced moon materials anymore. And if you follow my theory there, we could actually have some buy opportunities in some of these right now. So it's interesting. We'll see, of course, how all of this develops, but let's see if there's an impact on Take 2 ships. Obviously, with such cheap Take 2 ships, I'm expecting these to be fielded quite a lot. So has buying happened here as well at 31.15. There we go, let's get started. Here is the Basilisk. Normally in a deployment some logistics cruisers are quite welcome, and well, look at that, we haven't seen that in a while, but we're touching 150 million for the Basilisk, going up to 160, 170, 180 and 200 million pretty quickly on the front page. 127 million still for the buyers, but you can also see again that April-May bottom may just be forming. Cerberus, I think, ship of the line for quite a few alliances or groups, and yep, same story here. Haven't seen this price in a couple of months. 173 for the sellers, 151 for the buyers. People are getting ready for a deployment, I would say. The curse still not that great. It is a recon ship, but volumes are up quite substantially on this lower price point, and we are trying to form a bottom. Maybe this could be one where you could still try to buy one. Damnation, clearly again a May bottom might just be forming here. Damnation at 340, buyers at 283, so there's still a huge margin between sellers and buyers. If you spot the right ones where you can still grab a buy order, that might again be a pretty good deal, but you can also see here that they are trending up. Then we've got the Deacon that's still flat, so small logistics frigate, who knows, might come in handy, and it's really on 0 buyers, so it's a possibility. Volumes have already started to go up, but not enough to impact the price. But yeah, volumes going up might just mean that it's the right time to buy. Eagle, definitely another ship of the line. Look at those volumes in the last week or so, 210 million, 164. Had we known, and this again is something that the Imperium definitely does as well. So had we known about this deployment, obviously I would have bought a lot of Tech 2 ships. and some guys in the Imperium will undoubtedly have done that, although they are in all likeliness buying mostly for their alliance to again have those cheaper fleets to draw out. And if the enemy has to respond now, well, they've got to pay for more expensive fleets. And then, you know, kill boards might look like they're equal, but if you bought them 10 days ago, 15 days ago, or even a month ago, then of course you actually have way cheaper fleets that are being destroyed, and that economical warfare is of course par for EVE Online in general. But I know that from what I've read and seen, that the Imperium are pretty much masters of this. Then we've got the EOS next. Look at that volume going up, and I actually bought one as well before all of this, so I'm pretty happy with that. It's up to 311. I think I bought it for 254 or something like that for for the EOS. So very happy for me. It's because I was planning to build one and maybe to use it in some activities. But there we go, a lucky purchase. And I also bought the other one that I mentioned, the Nighthawk. So we'll see how that goes. But yeah, come on, chips. Big parts of fleets tend to be primary targets as well, and so here is all of a sudden 100 of them, and that's buying, that's not selling this time. Then we've got the Ares, still pretty flat. It is an interdictor, but maybe in today's meta those are needed a little bit less, 41 million to 36. Then we get the Flycatcher, very big jump as well. Love the ship. Actually have, I think, 2 Flycatchers as well for PvE activities. Massive shields with missiles, of course. Incredible combination. 52 million now, 45 for the buyers. And yeah, you bought them for 40 just about a week ago. So that was another definite trade opportunity, had we known, of course. Then the Guardian is still lagging behind. 125 to 120. Honestly, that looks very interesting to me, because right now it's obviously shield logistics. Then if we read this, and shield ships with the Cerberus, with the Eagle, that are taking front and center, but eventually that economical aspect starts to play a role as well. And then you are going to not pay, let's say, 200 million for a Basilisk when you can pay, where were we here? We're at the Guardian, 130 million or 150 or something like that for a Guardian. Then you are going to create and field some armor fleets as well. So this one could be interesting to jump in on to grab a couple of cheap Guardians. Then we get the Heretic, still very low as well. The Hound doing a little bit of a turnaround. Stealth bombers, I would have expected that as well. We did go below 15 million, so this could also be just a natural bounce. 16.4 for the sellers, still 14 for the buyers. I've mentioned this in many EVE talks before. If I were to do some real gambling at the moment, wanting to do some Tech 2 trading, I would go for the stealth bombers, for instance, because they have those extra uses outside of just the big fleet doctrines and things like that. Ikitursa still trending down, heading for 500 million, 514 to 500 million. I mean, if you can buy one below 500, honestly, also looks like a pretty good deal, because the Triglavians are ships that are used quite often for, well, hitting above their weight, you could say, getting rid of structures, getting rid of larger ships. They have that powerful winding up weapon system that's perfect for that. They are used, as far as I know. And so you could see a bump in that as well, but maybe not right now, as I think, yeah, those shield cruisers seem to be par for the course in whoever's planning to fly them. The Ishtar doing a little bit of a bump up as well, trying to form a bottom, but still very cheap, 136 to 131. Ishtar fleets, I think, could be part of the meta at some point. They can field 5 large drones, you can do sentries, you can go in closer with heavy drones, so you do have a lot of options. Might be interesting as well. Then the Kirin has clearly turned the corner as well. Once we go back again into shield stuff, things are a little bit different. 18.5 to 16 million. Manticore, right here we get the volumes, and we pushed up above 20 million. Yeah, last week should have bought a couple Manticores. I am a little bit late on all of this, but who knew that a deployment would happen over this summer? I personally didn't expect that. 22 to 16 million. Nemesis still flat, so that looks like it could be a jumping point as well for a stealth bomber. Nighthawk, all right, I thought this one would move as well. I mean, it is shields, it is missiles, but no, that one is still very low, 253 to 246. I think I bought one from these sellers here. I was just lazy, but yeah, 253 to 54, not bad for a Nighthawk command ship, battlecruiser, Tech 2, missiles, shields. I mean, it's potentially also a very nice PvE beast. Oneros, a little bit of a jump, but not too much, 120 to 95, so maybe also here buying below 95 and then hoping, of course, that it gets bad enough that they have to field some cheaper armor fleets as well. Then we get the Purifier, more popular stealth bomber, also made its way above 20 million. First seller coming in now at 19, but honestly, I think 20 million is here to stay, potentially, if the war does happen, of course. But that again, slight trade that could have been attempted. Then we get the Rook, nothing too special there. The Saber, still pretty cheap as well, 40 million. Buyers at 37, so another interdictor that you could look into. Scalpel, pretty flat. Scimitar is now at 140, and not that many, right? It doesn't take much to bring the Scimitar to 160, something like that, but I guess the volumes aren't really there compared to the Basilisk, and as a result, this is where the buying has happened. Then we get the Sleipnir 1 year low point on in, I think it's Armor Command Ship, 241 to 230. Almost looks like something I might, let's see what its bonuses are. So it's got traits for medium projectile, alright, damage and fall off, damage as well, shield booster amount, so you could make that into a shield ship as well. And does it have drones? That's a little bit... 5 small drones, yeah, honestly it's not as good as, let's say, a missile system, but maybe it's... No, I've got an EOS, I've got a Nighthawk, I'm not going to buy a Sleipnir either, just because it's at a 1 year low point, but maybe for an investment, that's something that could be interesting. Vagabond chart is still pretty low as well. And finally, the Zarmast is also heading for a 1 year low point. Are we buying these for close to 400 million? Yep. Honestly, a couple of Triglavians. It is very expensive, of course. 500 million for a trade is a lot for a single ship, but these are pretty low as well. And with the deployment, I think Triglavian stuff could come at the forefront as well, eventually, or for the right target in the right situation. So all in all, the first few inklings of war prep are here as well, which potentially, again, just like with the advanced move materials, means that if you're looking for that wartime trade, you could actually do some buying at the moment. Then for Tech 3 could be interesting as well. We thought everything was stabilizing, but we know that some destroyer fleets like Jackdaws and Hecates and Confessors are used in Nullsec as well. So let's see what happens here. 4120, let's say. So here are the tactical destroyers. Here is the Confessor. Volumes up a little bit, but able to stay at 50 million. Just below that for the sellers, 47 for the buyers. A little bit of a surprise, but yeah, no action here just yet. Supply is, I think, just enough to keep things stable. Then we've got the Hecate with the minimum prices. Well, today heading for 50 million, 55 to 51 million. Supply-wise, half a page. Not a lot though, so maybe that's what's happening here. They can't really buy 200 of them just straight off the market without completely bumping the price to stratospheric levels. 55 million for the sellers of Jackdaw, 49 for the buyers. And then finally we also have the Zwepel that still has that much bigger range, but also trending up at the moment. 54 million to 47 million. So all in all, another week where I would say most of them are coming together. The Confessor is stuck a little bit on the most supplies at 50 million, but everything else is basically heading for that 50 to 55 million for the sellers. And volumes are pretty low, which might just be the new story, right? Before, in a Nullsec war, I would have expected to see lots of tactical destroyer activity, but maybe the need for all of that gas in faction ships has really cut down on the availability of these tactical destroyers, that it's just not going to happen that often anymore, and that this is why, well, this just basically hasn't moved. So has this moved to cruisers then? Maybe that availability has increased with it, them being less punishing. Let's see here for the Legion, still not much of a move here either. 190 to 177, pretty much in the middle with the minimum prices heading below 180. Yep, just below 180. So you could try to buy a Legion at 180 and you can already immediately sell it at 190. There's definitely trade potential here. If you see that 5-day moving average going well below the 190 price mark, you get one of those pronounced buy opportunities. That could be something to look for before jumping in. The Loki is pretty expensive at the moment, 230 for the sellers, 205 for the buyers. So maybe some Loki purchasing is what might have been happening. You do have a volume spike here to bring the price up to 230, and then a little bit more volumes in the last couple of days as well, but no real signs that a big Nullsec group is moving on Tech 3 apparently. Proteus slowly edging up, but Minimum price is just above 180, so nothing too special here either. And then finally we've got the Tengu that's also basically bumping into 200 million. Minimum price is forced up here a little bit, so that below 180 was clearly a buy opportunity, and now you're selling at 200 million. But it's all in all pretty slower than what I expected in Tech 3. I would say most action is to be expected in Tech 2 then for the upcoming potential deployment in EVE Online. Well, they are of course basically super cheap at the moment, so why would you go for basically expensive Tech 3s when you've got super inexpensive Tech 2s at the moment? That does make sense then. And for the extra product of the week, I am going to take another quick look at the gecko. I am curious because I found that I'm holding a couple of these at the moment as well. So they're still pretty low, below 100 million on the average price, 100 for the sellers, 91 for the buyers. EVE anniversary is over, so that's the slump that we are seeing here, maybe even a preparation slump, as well as people expected things to drop around FanFest, and at the moment we're basically trading the gecko at the low end of the range. So if you're looking to get into that gecko investment, this could actually be the time to do so. You're buying them very close to 90 million, and if we look at the chart like this, you can see that selling above 110, which is a 20 million profit here, is possible if you keep a close enough eye on these markets, and maybe even a little bit of destruction happening potentially during a deployment could be pretty good as well. So for the gecko, right, if you're looking at that unique item to try and maybe protect part of your wallet from inflation, or to get one of those seasonal trades that depend on basically predictable factors, I mean, they're somewhat predictable, but you are dependent on basically CCP not bringing new gecko potential into the game for a while. But you can see here on this chart that that does happen, and so yeah, it's interesting. I might actually double down on this one, grab a couple extra for myself, because they're also pretty unique and powerful drones to use out in space yourself. So there you go. The gecko is below 100, close to 90 for the buyers. I think that's an interesting spot to try to jump in. And that's going to be it for this EVE Talk, guys. Thank you very much for watching, and as always, I'll see you next time.